Hello guys, glad to have you on board again. Today we'll do another swing analysis video today because simply I think there's not so much to do on an intraday basis. So I know we're supposed to do so, and just making two weekly swing updates and two intraday updates per week as well. And obviously right now we're doing almost just swing updates, but that's because of the underlying context we have right now that is pretty foggy, and until further notice I must remain this way. So cryptocurrency is absolutely nothing new, just as usual. We've been having a breakdown attempt yesterday. We didn't really manage to make the candle close, so we try to go down. We tested the actual level of $102. Can still try to go a little bit lower, but I think that's more than enough. And the rejection once again out of that level, which means anytime we try to get there, we're having lower shadow candles, which is pretty damn good sign. It means that even though how hard the bears may try to break through those levels, there is no follow through, which means we go there, we trigger a few stop losses, and no one else get in. So we'll see how it goes. I'm just waiting for the moment we'll have a break up or break down that will be followed through, meaning it will manage to install candle closes. We're working on support areas, so therefore I still have a positive bias on this, meaning that generally supports tends to build themselves to hold the prices, and moreover, as we here have a built-up support area with a support in here which is on top of a previous one, which means we have a decent risk management. We know where to put a stop loss if you want to support this price. We're still waiting for this to come and to play its game. I obviously would like to have something like that, a bullish reactivation, but not with the close like that. Obviously what I'd like to have is something like that, pure and nice bullish reactivation with a blue candle closing at the highs, showing that the bull's taking it over and holding the value. Remember that this channel must absolutely be on your charts, because that's definitely an area of interest that we're probably going to have to work with. So be aware that this will obviously mean something if we go there, and this will be acting like a validation to me. If we can manage to go there, testing that trend channel, and whenever we'll manage to break this one up is definitely where we'll get to activate this scenario, where those who've been buying the speculation lows, the speculative lows, will be able to breathe normally and eventually focus on some tiny reinforcements for those who will be aggressively wanting to manage their risk and maximizing the gains of that forthcoming trend. Be aware that this is still pretty much speculative at the current stage. We don't even know if there is going to be such thing in the future. So please remain fulfilling this problematic thing that we don't know what's about to come, and therefore high level of uncertainty, which means you cannot trade with leverage, otherwise you're just betting, which is far different from trading. Obviously we're gonna have to talk about that damn shit of AUDNZD. I told you yesterday that I was getting out of this because of getting into the red area in terms of risk management on my personal portfolio, and I'm really sorry, but I'm gonna have to say that I kind of lied to you. Not entirely, absolutely not. I definitely took a loss yesterday, but for some educational purposes, I decided not to tell you what I exactly have done. So what I've done truly is basically taking approximately 50% off the table. I'm going to just unwind this thing because it has been playing the way I thought it would. I knew there was another catalyst down the same day we managed to break down, and I just wanted to wait for the candle close to occur. The thing is that, and I was right saying this, and this is exactly the actual informations I wanted to share with you yesterday, that when you take too much risk, like I clearly was doing back then, you have no choice but to reduce that risk. So you can do it entirely. So you just get the hell out of the position and you see what comes next, if you have to enter again or not. Or you can do something in between, which is a tighter risk management in which you're going to assess what you're ready to lose and how much risk you're ready to take. And I decided yesterday to just close half the position. And the other half was just depending on the candle close, which means I knew this other catalyst coming from NZD will be showing up earlier than the candle close. And I knew that if this one was positive or negative for NZD, but basically it will be positive for AUDNZD, and that we may just make a lower shadow candle. Remember that the invalidation was actually, remember the technicals I said. To me, invalidation was breaking down this stop hunting level in the daily charts, which we basically were doing yesterday when I recorded the video, but as the candle closed like that, we didn't break anything. Actually, we just got there to fuck up some stop losses, obviously mine included, because I had to take down 50% of that trade. Now we're going to uncover the entire process of thinking out there. I'm sorry I lied to you, but I did it just for one single reason, to basically protect you from making bad decisions out there. I know a lot of you guys have been playing AUDNZD with me. I know some of you guys have been playing this with dangerous leverages as well. And for those who were in the same context as I did, which means in the red area in terms of risk management, then obviously something needed to be done. So if regarding what we have today, what you're thinking is, oh shit, the fucker just got me out, he told me to get out, and the market has been reversing right after. How dumb is this, Phil? If this is what you think, then let me tell you something. The loss you might have taken in here, first, is a dangerous lesson that you take, that you took, that first of all, you've been taking way too much risk that you should never have gotten yourselves into. And so the problem doesn't come from me, the problem comes from you, because you must be aware of one thing. I've decided to take maximum risk on this trade because I was reinvesting previous gains, which means the loss I've been taking yesterday doesn't really matter to me because it's previous gains I took from this very same asset. So to be honest, as I said, I took 50% off the table, and it's nearly a 4% loss I've been taking yesterday, which is pretty significant. It's not a tiny loss, 4%. I'd rarely take that kind of loss, but it happens. I accepted to take 4% off the table in a pure loss on the account. And the thing is that I thought if the other NZD catalyst just either push the knife even further, then I will extend the loss, which means the entire loss was approximately 8%. Okay? I took 4% immediately, and I decided to take the risk to have NZD catalyst to be bullish NZD, and therefore it would have pushed further in the ongoing trend we had yesterday. Let me just put that in perspective. This is the 4-hour chart that really shows up. Okay, this is the area in which a decision had to be done, and I was clear about that. I tried to hide that as much as I could, but definitely I didn't want to press that button. So instead of being black and white playing this area, I decided to go shaded grays, which means instead of taking it entirely out, I decided to take it partially out, 50%. But I had to do something, definitely had to, and as I said, even if I didn't like that, I had no choice but to get out. For what reason? Because too much risk. This, at this point, was a fucking 8% loss on the account. And out of this, knowing that we had another catalyst, which I don't and voluntarily didn't talk about yesterday, because I knew that if I mentioned that, you guys will play and gamble that release, which I didn't want you to do. I wanted you to assess the risk at the current time. Yesterday, when I recorded the video, we had the first catalyst down, and it wasn't a good sign because we broke through major level. I knew the second catalyst will come before the daily close. If I just talked about that, I know how you guys will have reacted. You would have said, okay, no problem, then I'm going to take that risk and see how it plays out. So now, remember what we said. It's a Schrodinger's cat box, which means Now we know that we've invalidated this thing, and we still haven't broken through the previous highs, so it's still not considered as being validated. It's kind of, we try to go down and we invalidated the bearish move, but we still haven't validated a bullish move neither. So don't go too fast, okay? For now, we've just been neutralizing what's been said yesterday by the RBA. So, first option was this. Bearish news from NZD and basically going back to neutrality, which we've been doing. But the second option was also going fucking there, which is the yearly support. And we could very well have gone there. And if we were going there, then this is the loss I would have taken. With a leverage 5, which means you take that and you multiply it by 5. I couldn't handle such thing. Absolutely not. I remember I have approximately 10% gain in the pocket coming from AUDNZD. Previous partial gains have been piling in here and there. I was ready to reinvest those 9 to 10%, but no more than that. This is the reason why yesterday I got out. It's just a pure calculation, and I'm going to unveil it entirely. Now that the game has been played, I will unveil the entire truth. Okay, so what calculations I've been doing? Simple calculation. We're here, and the market will either go there or there after the AUDNZD, and it could very well stay there as well. Okay, there is a third option, not moving, which is basically another possibility. If we go there, 15% loss. I can't afford that. That's not possible. I cannot gamble with such amount of money. Going in here with an 8% loss. Okay? And obviously going there is just fine. Means that I shouldn't be getting out. The market will just go there, fuck some stop losses, and then invalidate that breakdown, which now we know has been happening. So, calculating out of this, 8% loss, which means you take it entirely. Okay, so first scenario, we go there. It costs you 8% loss. Okay? In here, no loss, which means you're still in with a negative pricing, no problem. The account is still negative right now. That trade hasn't reversed to positive. I'm still negative in terms of return, but I still have positive expectation for that trade. But that's how it is. For now, I'm risk managing that trade. Whenever I go positive and validated, then I'll go further away with some more exposition. So 8% loss, all right? Now, this is the binary choice, which means you take it entirely out. But there was another option. Just taking 4 or 50% off the table, which basically comes up with a second option, which is taking a 4% loss immediately, which I've done, okay? So loss taken in here, which leaves you with 50% of that thing, which means it's just another 2.5 leverage, okay? Which means now this time, all you have in here is this multiplied by 2.5, which is a 6% loss. So, in that perspective, I decided to take 4% off the table immediately, okay? Immediately in here, and said if, for some reasons, the NZD catalyst were to go as bad as it could for me and for the AUDNZD, I'll see the price heading instantly there, and I will trigger my stop loss. Entire stop loss. The remaining 50% would have been put it off the table. And the entire loss would have been 4 plus 6, which means a total loss of 10%. Okay? So this is what I accepted for just one goddamn reason, because I'm investing previous gains, and if this would have happened, I would just have lost them all. Lost all my gains coming from fucking 2 years of trading AUDNZD. Okay? So it would have been a shame, and it was risky, and I was ready to take that risk because this is handleable. But remember this, if I didn't take the 4% off the table, nor the 8%, which means I just play that game fully leveraged, remember how much it would have costed? It would have costed 15%. So, what can I do with this? This is unacceptable. I can't do that. It's not acceptable in terms of risk management because I can't afford that. This, I can. It's just a matter of choice. Do you want to do that? Do you don't? Don't you want? It's a personal choice. This is the choice I've been making. I decided to take 4% instantly with the risk of losing an additional 6%, leading to a maximum 10% loss in the worst case scenario, which was acceptable, even though I would really didn't like that. But what big difference does that make? 8 or 10? That's exactly, it's a personal choice, okay? I'm not giving you rules to follow. I just explain you how I've been processing this in my head, because that's why we're doing those things. I'm not here to tell you what you need to do. I'm just telling you what I do, and for goddamn right reason I'm doing this, so you understand how things goes on in a trader's mind. And it's simple as that. It's for pure transparency. But I didn't want to explain that transparency yesterday, because I know some of you would just have followed accordingly with a huge leverage and something far beyond this kind of losses, and I don't want you guys to risk. Okay, I'd rather have you guys get the fuck out, take their 8% loss, and eventually re-enter later with a better mindset and taking the lesson of what it means to be over leveraged. If you've been over leveraged and took a nasty loss yesterday, then the lesson isn't that you should have done the way I've been doing. The lesson is you should never have gotten yourself in that perspective. And I was clear about that. Taking the loss yesterday was to be done only to those who had a huge leverage. Those who were still speculative trading with tiny amounts of money invested could very well have just taken that risk without even sparing some losses. That's pure and simple it is. And I hope I was clear enough about that yesterday. Taking that loss was done only because I was in the very dangerous context with too much leverage. Alright? But no more than that. If I had comfortable leverage, I would just have played this game with a full, with my position not even partially closed. Simple as that. But I was too exposed. I had to reduce, and I had multiple choices, and I decided an in-between scenario, not taking all the risk and not taking no risks. I decided to take an in-between solution, but I wanted this to play before saying it so. Okay, so now that it's been played, I know you guys can copy me, but you can get the actual information. Okay, so now the information has value, but no implication into your trading, and I very well value this because I know and I'm aware of this. I'm kind of a YouTube influencer today. I know lots of people watch out for what I say. A lot of people stupidly just copy me because they think I'm a god, and therefore I do have some responsibility for what I say. I stand for what I say, but I also have to take care of timing, and I very well wanted to say that yesterday when I recorded the video, but I chose not to do so for that simple reason. So today it's fine to explain you what I've been doing, but yesterday I just wanted not to say it. Alright, so AUDNZD is still in the portfolio today, but half leverage, which means I'm no longer leverage 5 in here, I'm leverage 2.5. I already taken a 4% loss, and I very well hope to come up for those losses in the future. It's just that right now I'm back to speculation, okay, but with a decent amount of risk. I can handle that 2.5%, and now my stop loss is set there, okay. In here, I know that if we go there, I'm taking a fucking 10% loss, and I'm ready to take this one. And if we go there, you can be damn sure I'm not gonna hesitate a single second, okay. If we go there, there's no other margin, there's no other managing trade. We go there, I'm fucking out, period. Alright? We're clear on that. At this point, there is no more lying or just pushing truth for the next day. Okay? Now I'm fully transparent with you. We go there, I'm fucking out and terminated for AUDNZD scenario to me. I will have to get the fuck out and eventually enter again fully out the next time, if this happens. And if obviously we return positive on the trade entry and everything like that, I mean, I just want you guys to have the overall perspective. Just have a look at how tiny these fucking moves are in terms of the global scenario. This is the area I'm forecasting us to go. Do you really see how fucking far from the current prices this is? And moreover, how fucking tiny this is compared to this. So these 4 to 10% potential losses I'm risking right now, just freaking worth the shot regarding the gain I want to take. I've been clear about that since the first day. I definitely know that AUDNZD is definitely going to be one of my biggest gain in history of trading if this scenario pulls through. If it obviously goes wrong, and there's a possibility it does so, then obviously I'll be taking a more than average loss. Okay? So for now I'm reinvesting previous gains, and if it works just fine, whenever the time comes, we'll make the final countdowns, the final countings. I mean, if we go here, okay, let's say I expect this to take 1 to 2 years to get there, but if we go there, the day we do, the day I press the profit taking button, we'll obviously remember this. I'm not the kind of guy who forgets. I'm not the kind of guy who just hide the losses in between a scenario. I will remember that loss. I hope you will remember those numbers, and whenever we'll come back there, I'll tell you how much I made. And then we'll make the fully calculations, and you'll say, okay, eventually back then it was a rough time. It had to do some management, and and it might have taken some subsequent losses, but we will figure out the underlying gains whenever we'll get to the actual targets, because I can tell you how much I expect to get whenever we'll get there. I expect to return 100% out of just that trade. So the 4% risk, the 4% loss, the 10% maximum loss I accept to take in here, I'm ready to fucking take it, because the expected return is very great. All right, because I will be fully leveraged on this thing, and as you can see, it's approximately a 17 to 18% gain expected out of the current prices, the current entry prices I have. All right, and I told you I will probably be leveraged 7 to 8 on that scenario, so you multiply this by 8. All right, and you can get to how much I expect to make to that scenario, and therefore it explains how much I'm ready to risk out there. Big risk, but for a big gain, and therefore if it goes right, I accept. I will be obviously very happy with that. If it goes wrong, then I'll obviously have to pay for this. But to be honest, look at this scenario and you're very well going to understand this thing. So, and to be honest, this is the last time we're going to go as long explaining the AUDNZD. But this is because I think this is where the actual value is in here. Because I'm not just telling you what I do. I try to teach you guys how a trader, a professional traders actually do manage the risks when things do right and when things do wrong. But I think you most learn out of me when things goes wrong. This is why I tend to talk a lot more about what goes wrong and not what goes right. And I know it's confusing for so many people because you guys would like me to talk about what goes right. But when something is just validated, I don't really give a shit about that. This is not what my job actually is about. My job is to make a difference between dumb traders, those who always focus on what's good, and they just push the trade away when it goes wrong, which means when something goes out of control, they just go denial and they let go with that trade, which ends up taking its entire account down. And I'm not that kind of person. I teach you that if you want to get yourself becoming a better trader and becoming a professional trader, you have to think the way a professional thinks. And I've been clear about that since the first day. A professional is just, what's the difference between the professional and the retail trader who's learning trading? The retail trader focuses on gain. I focuses on managing my loss, because the difference is definitely there. A trader is just somebody who better manage its losses. Everybody gains, everybody loses. To me, gaining is pretty fucking easy, but not losing is definitely where the key is. This is where the hidden scenario gets through. This is what makes the difference between somebody who will make a shitload of money without risk-taking and somebody who will make shitload of money with heavy amounts of risk-taking. That's the big difference. I see so many gamblers who make a lot more money than I do, but I can tell just one thing: those guys won't be there 5 years from now. I will still be there 5 years from now, because we definitely not take the same amount of risk, and risk somehow and some way will show up someday for this guy. They'll come up for them, they'll take down their entire accounts. I don't think it's nearly going to happen to me. So anyway, That apart, so it was just to kind of just say something so you can guys have a global value out of this, understanding that in my mind all of this is automatically processed. I know what the outcome is, I know everything, so I'm risk managing according to this, and I'm not doing this just because I think this trade. And remember how wrong this has been gone. I was buying that shit back then, and I had to handle that losses all the way through this, which means I had to reinforce to bring down my average enterprise down to this price, but I got too far in the red area, and that tiny catalyst yesterday just forced me to reduce the leverage. But I'm still in, and believe me, few months from now when we'll talk about that scenario, you'll see, I hope, a pretty different picture in which those those very dangerous managing areas will just be like a very, very old nightmare. So anyway, just so you have a look at the global picture, and we can very well how fucking stupid this market has been. I mean, I've been trapped in here. I thought the market would just surge at that point. It didn't. It just got wrong-footed. Then we got in here, huge support. Obviously, I bought this one. Took nice gains, and in here, what have I done? Okay, sure, we're breaking this time. It's gonna be great. We tried and fucking reversed. Exactly. Remember, this is where I've been fucked. In here, I just thought the market would just do okay, range action, and then we're gonna trend once and for all. We didn't. So obviously, it went unexpectedly to the opposite side, but that's how it is. And as I said, so far, it's still a gain on that scenario, even though the 4% loss that's been happening yesterday. And you can very well be damn sure that whenever this thing validates, we will count everything. All the underlying gains in between in here, in the speculative area, the loss we'll make I've been doing in here, but I'll obviously tell you about the reinforcements that will come across in the process and the actual profit taking if we reach out to the final area. So, for now, I think we're still early building this trend, but you can expect trend, which means now the speculative trades will be over. If these things reactivate, I'll start piling up the positions, okay? So starting from now, if we reactivate in the forthcoming weeks and months with a true validated signal down this bottom, you can be damn sure that next time we're never ever gonna pull back, okay? So can expect something like that to play this game. If we go up, we're gonna have a trend. Definitely, because we've been building and pre-building everything we need to get the fuck out of this triangle. So next time, there's not going to be a pullback in the triangle, everything like that. It's the last time we've got noise. We've got first noisy area, second one, third one. Definitely this one is a big trap, but I think next to this, the trend will be mature to emerge. I mean, I've never seen such thing in my entire trading history. This is the hardest scenario I ever had to play. And this one definitely looks like what happened back then. So basically, it isn't that big of a difference. It's just that this one back then hasn't got that much trappy. And this one was really clear sight. Okay? It's definitely the easier it could have been back then. Okay? It's definitely, we've been trading this way. I had some kind of a little trap in here anyway. So same thing goes. Before trending, we trapped a little bit. Okay? Got in here, trapped a little bit. But the difference is when you have that brutal shaping kind of triangle, I mean, when the angles of the triangles are so brutal, I very well expect us to break through this, just temporarily at least. And in here, selling was pretty fucking obvious, as selling in here was obviously being a little bit too aggressive. But in here, I mean, selling in here, for what reason? Buying in here really definitely would have been, but I mean, look at the shape of that trend line. We clearly didn't need it to go all the way through these traps in here. All right, and I definitely think that what's been happening yesterday is a good sign that a bullish trend will emerge in here. And I think that I'll give you my perspective, okay, my feeling in here. I've got nothing in terms of technicals to support that, but I think the daily chart speaks for itself. We've got a range in here. Okay, when you've got two stops, one after the other, that has been traded both, I mean, we got there, rejected, got there, rejected, you can very well tell that we've got a strong, very strong range on going in here. As long as we don't get the fuck out of here, you can put a black box, okay? We go out, we will obviously trend out here. We go to the downside, we'll obviously trend as well. And this will definitely means invalidation to me. All right. So despite that little focus, we're going to talk about the US just to finish this thing, because obviously there is another trade to handle as well in here. So trade management. So I'm sorry, it's not that I like to talk about the things that goes wrong. It's just that this is where you learn actual valuable information. Talking about what goes right is just uninteresting as hell. In here, what we have on the SPX, so we're going to have a look at SPX, the actual cash sector. Just give me a second to just put this, yes, in an arrow perspective. It's a little bit too much. All right, we can barely see prices in here. So what we have there is pretty interesting. So just give me a second. All right. So what we had yesterday is absolutely crazy. When I watched this intraday session yesterday, and I had a very close look at this session, it was like a fantasy. I can't put words on this. I mean, when we got in here, I've seen so much weird behaviors in the order book. So definitely we've got market makers in here working out this price area. So you can expect that we're not going to fall apart and fall off a cliff just in a couple of days from now. So you don't expect, I think, a reversal like it happened before, which in which we've been strongly reactivating the bearish trend. I think we're going to have a market making, and I'm just going to go fully unveiling the informations I've been using to come up with that conclusion. So it comes out, first clue I've been coming up with, and you know, I'm basically just like a hunter. I'm hunting for clues, and I'm just hunting down the beast I want to take down. So the beast I want to take down in here is the SPX, and I try to figure out some patterns, some outstanding things, because I think the prices are just lying right now. It's just false clues for dumps to talk, and I figured out, anytime I see this price manipulation, I say, okay, normally I should see something going wrong with the volume, and this is exactly what's been going on in here. So you look at the cash volume, and the cash hasn't been playing normally. As you can see, we've got some huge spikes in volume, so it's just by reading through this that I kind of figured out what the actual thing is and who's handling that market and which way it's handling it. So first burst of volume happened back then in here. Absolutely unnoticeable thing. When we were back then, everybody was just bullish, and no one even figured it out that we had a surge in volume in an area that kind of, I mean, could have made sense, and moreover, we had a pretty fucking exit signal and momentum back then. So yes, it definitely was kind of a concern that everybody has been forgetting about. So prices have been stopping in here, been ranging a bit, and I expect us to do the exact same thing near the current price area. So it means strong bears have been getting in here, stopping the prices, let the DOMs trade for a few days, and then obviously they took it over. Okay, so they've been selling aggressively, managing the risks, so they stop the price and they prevent the price from falling apart. They just force prices to work this area for a bit, let the DOMs buy again, and then they sell through supports. The price just falls apart, and in here, as you can see, volume is rising. So in here obviously is where all the stop losses triggers. All the bulls have been buying in here and in here just figure out that they've been proven wrong. And in here obviously is where we stop. First target, so those who've been selling in here would just probably take 15% off the table in here, just a tiny profit taking. Then price rebounds, okay, then got a second burst, more volume, so in here they've been taking probably 25% off the table, let the market range a bit, and then what's the next time you've seen the volume surging out of 20-day average? Okay, in here, pretty much on the bottom, so probably just another partial profit taking or some bulls trying to fight back. Okay, stop area, we've been stop hunting in here, so we just got in here to take down some stop losses. We go here, we try triggering the stop losses, and bang, another big set of volume to the downside. So this is definitely this. Those who've been selling in here, been reinforcing in there. Obviously, they didn't reinforce there. As you can see, absolutely no volume, okay? But they've been profit taking partially in here, profit taking partially in there, and probably did nothing in here, okay? So selling, profit taking, selling. Okay, you can be damn sure that what they've been selling in here is exactly what they've been profit taking in here, plus a little bonus. Okay, then the burst comes up, and then boom, second unexpected volume in here. Okay, the day before Christmas. So you can be damn sure that the guys who've been selling in here has been profit taken down there. And I don't know if they've done it entirely or just partially, because the volume in here also shows a lot of bullish entries. So those who've been selling probably have bought themselves out, plus probably have bought the pullback, reason why this has been so violent. But what do you think is happening now that we have another set of volume a few days ago? And what's important is the timing, because that day didn't really happen the day Powell's been talking. This is Powell's talking day. We've been making an average, over than average volume, okay, more than the 20-day average, but the day right after, that volume shows out of nowhere. And it shows up not nowhere, it shows up at a very dense technical area, the previous support that's now acting as a resistance. So obviously since then we've been trading a few days on top of those levels, but I suggest you just highlight the latest two areas of volume. All right? So to be honest, in here, look at that. Next time we had, previous time we had volume in here was there. Okay, is where we stand it out of normal volume. Okay, and as you said, we've been trading one day on top of this because G20, and then we've been reversing firmly. Okay. Now we've been trading 1, 2, 3, 4 days on top of that entry, and you could definitely say that somebody has been trading in here with big volume. We're talking about billions in here. We're not talking about just a few guys buying or selling stocks. We're talking about big hands in here who's been playing with big amounts of volume. Who do you think has been doing this? The exact same guys who've been playing all those swings. And every time they've been playing, something's been happening a few days afterwards, and trends have been emerging almost every time. This is risk management in here, so definitely they've been securing the trades and then ongoing. But as you can see, the volume that has been induced probably tells that they've been selling again, and those guys have been proven right so far. So I tend to believe they still will do. It's just this time they might just have to handle a little bit of risk management in here. But be aware that if they have traded bearish in here and they are handling 4 or 5 days, let's say we could spend more days in here ranging that area. Do you really think those guys are switchers? The kind of guys you can manipulate and just market make? I mean, even if prices do this, I mean, sorry about that. Even if prices were to do something like that, I mean, ranging in this area, going sideways, do you really think that kind of guy will just be bursted by this? Do you really think they can be changing their minds each and every couple of days? They don't. They've been selling, and you can be damn sure they're just risk managing in between, and they're not going to switch. Only retail stupid traders are switching. Professionals don't do. They hang up to their trades as long as it's viable technically and as long as they have a decent risk management to this. So now what do you think those guys, if they're selling each and every time at lower prices? They're selling at lower prices, so they expect the price to go lower. So you can be damn sure that they're expecting a target below this price. I think they also expect the price to go in the areas I'm targeting as well. Okay, so you can be damn sure that they're probably targeting this same area. So do you really think that this just little bit of 4 days of 4 days trading on top of their entry prices really actually matters to them? Do you really think that? And they don't even give a shit. They've been entering in here, okay, selling entries, so 2700 is probably the area in which they've been starting to sell. They're probably piling up sellings for the few days they've been following as well. And we're going to take a, yes, risk-reward ratio tool. So this is the price they've been paying. This is the target they're heading to, and generally professional speculators can tend to make 1 out of 3. So probably you can expect their stop losses to be there. Oh, guess what? That's exactly where I've put in mine as well. So do you really think those guys are changing their mind right now because we're just working around a few negative days on their account? They don't give a damn shit. All they focus about is the gain as well, and just risk management in the dangerous area. Which means we go there, they take a huge loss, and you can be damn sure that those who've been selling in here will buy themselves out in here. So if we're heading to historical highs, obviously in here there is going to be a lot of stop losses, but institutional stop losses, which means huge volume to get out of the market if we go there. And definitely my stop losses will be as well. Okay, all I can tell is that some guys are playing to the downside. Okay, and this is not tiny amounts of money, and this is definitely not tiny guys who are playing in here. Those guys, they're doing something And for now, it's pretty damn hard to figure out if they're buying through that resistance. Because very well possible. When we have this, we can't tell what they've been doing. We all know that somebody with big amounts of money has been putting a plan in motion. The future will tell us what that plan is. I tend to believe that regarding this area and the knowledge I have about professional, they're probably not buying. But they're probably selling, as this is pretty much the same behavior that happened back then. So we'll see. I can see the pattern. I could be wrong. And in that perspective, those guys have been selling, and now they're buying to push through historical highs. And in that perspective, this will just be to reverse. All right? To be honest, as I said, trading is not about magically forecasting future. It's just about risk management. So those who might be, if I'm wrong, and if this is about to be played to the opposite side, then you can be damn sure that we're never ever going to retrace, because those guys will play the same risk-reward ratio, 1 to 3, that will try to push us to probably 3,100, which is the next Fibonacci area in a weekly monthly chart. So if they're heading toward this price, meaning extending through historical highs but not necessarily pushing a lot further away from this, just 3,100, if they want to do this with a 1 to 3 risk-reward ratio, their stop losses will be set there. Okay? So you can be damn sure that they will not allow the price to go there. So if we go there, and that's my validation level, I'll know pretty significantly that they are trading to the downside. This is why I figured out this scenario to be my validation. Anything that happens in there remains uncertain. Okay, I hope you're really understanding what this is about, because I know somebody has been playing in here. I don't yet know what its actual goal is. I tend to speculate on the fact that they're heading toward the same area as I do, and in that perspective, I'm going to take a nice gain just like they will. If I'm wrong, I'm obviously will have to pay for this, and they will take my loss. That's simple as that. It's a poker game in here. I don't really know what the answer will be. I don't know what the future will be. All I know is that as long as I manage my risk, playing just that unique game, if I get to take a loss, I'll take a loss that is 3 times shorter than the gains I could make, not accounting the reinforcement. So generally on a speculative scenario, reaching out validation and reinforcements and profit taking, I tend to risk 12 to 1. Which means the speculative losses I take are approximately 1, 2 to 3%. The gains I make after a trend has been emerging, I've been reinforcing, leveraging, and partially profit taking to entire profit taking, I generally take 12 to 25%. And on some specific cases, I can go up to 40% when I really have really well managed my trend. So as you can see, risking 1 to 3% maximum losses on speculative trades to end up with 12 to 24% return, definitely worth the shot. And I very well accept to be proven wrong 1, 2, 3 times in a row. Anyway, it's always profitable in the end. Okay? So this is the mindset, once again. This is what makes me so confident about the fact that the more I play, the more I win. It's just a matter of time until I get to win. And if I've been proven wrong too many times in a row, then I let go at some point, but I rarely do. And I'm not the kind of guy who surrenders. I'm just the kind of guys who let you win a couple times to win bigger the next time. It's as simple as that. This is how I've been fighting the SPX. To be honest, I've been selling for 2 years, and the prices have basically haven't moved since then. So we're still trading in this area, therefore, and even though we haven't been moving quite a lot, and to be honest, I started to sell in here on the SPX. So we're trading at higher prices, and still, I made a shit ton of money out of the SPX, and I haven't taken a single buying entry. Yes, just a single one in here. But that's it, all right? Never bought this shit since then, even though the prices are higher, I'm making more money, and pretty damn more money than the guys who've been following this trend. You can be sure about that. So we're going to stop in here because it's a pretty long video already. We've got nothing else to say. Basically, I've been taking short entry on Facebook, Visa, and Apple as well. So now I was talking about the fact that I will probably take them in portfolio. I just decided to do so. So here it goes for Apple. Just wait for this to come. All right, so Apple signal in the expected price area, trading the trend channel. So tiny amounts of position sizing in here, because obviously the stop has to be set pretty far from the current prices. And the price expectation in here, maximum price expectations are in there, and we're trading right into the DOM zone, which means this is why I'm taking to sell the top of that DOM zone, because I think we're just going to go straight line. There is also the risk that we could just pull back to in here and just make something like that, okay, an ABC. That's very well probable, but I think anyway, shorting in here with a tiny amount of money will be more than enough if you can handle the prices to go up here. Obviously, I take this speculative trade just to basically dip a toe in the water, tasting temperature, and if it goes wrong, no problem, I'll hold this trade for as long as necessary, and if we get to pull back to this trend line in here and in that red area, I'll obviously double down in here with much more aggressive position sizing in here, because the risk-reward ratio will be a lot more interesting. So it's just, I want to be part of it. Just same thing in here. Remember how much I've been making in Apple going down, and even though that trade hasn't been managed very well, but I took freaking nice gains in there, and I'm reinvesting part of those gains in that speculative trade, first and early speculative trades. I know it's very aggressive. I wouldn't be surprised if prices keep on heading to the upside, but I don't think they will. So I'm in. Facebook as well was the plan. Same thing goes in here, aggressive signal, but needs an horizontal validation, which means when you got those gray signal, it has to happen in a price of interest, an area that matters. So let's put that fucking line in perspective. Do you think this price really matters? Fucking yes. So definitely I've been trading this signal. It's aggressive as well in here. The price could very well reach out to the upper area. So same thing goes in here. Stop loss is on top of that resistant area, and if we go there, I'll double down with the positional sizing. So still a very tiny position sizing in here. I'm targeting just a tiny lower low in here, or at least securing the gains out of the previous supports. I don't think Facebook is obviously going to collapse, but I think we can very well retrace down to this level, which is a major support. So I would say we could go down there, eventually trying to break through this. So trying to push, for those who are low risk, will have to profit take on the support area. Those who like risk will try to take down the breakdown. So this is how it goes. As you can see, we've got low volume area in here, so this is definitely, god damn it. So as you can see, those who play low risk will get out where the volume actually plays its game. So they'll get out in here, 106 and 17. Those who will like the risk will play the breakdown of the low volume area, heading to the lowest ones, which is in here, and they will try to take down prices to 111 approximately. All right, but that's what I'm forecasting. So as you can see, definitely a much better risk-reward ratio than Apple, but still it's not that comfortable. So don't put a lot of stocks in there. Very speculative. The goal is just that we've got far more odds to go there than going there. Therefore, I forecast myself for the gain. Just don't know how it goes. It's very aggressive. I'm very aware of that. And to be honest, it can take a pretty long time to get there. Could very well just go there until June or July. So you really have to be patient in here. If you don't have that mindset, if you're lacking of patience, pretty damn don't get in here, or get in here with a very minimum position sizing. Just take one stock, for example, to just force you shaping your psychology. In that perspective, you do an educational trade, not to gain money, but to gain confidence and shape your psychology. We'll make videos about that to just basically help you identifying trades that you need to take, not to take money, but most likely to take, those trades because they have a high level of educational content. They will teach you things that matters way more than just a few dollars or euros. At some point, learning how to do this freaking damn hard job is definitely better than just getting short-term gains, okay? That's it for today. Bye guys, see you tomorrow, see how this week's how this very weird week will handle itself, but I pretty damn figure out that we may expect a doji candle out of the weekly charts. So we can very well expect, so you can very well expect us to close lower this week, but don't expect us to close negative, so we're probably going to have just to close back into the previous range, which means 27.17 is definitely what I think we may get to close down to. So if there is another price of interest you need to highlight, is this one, and I've already done that, meaning I know what job I'm doing. But yes, this is the price we want to get to close down to. So I expect us to probably just range this area today, okay, just kind of die in between, and probably a bearish day tomorrow to go close at the low, and I would pretty much like to close below that level of 27.16 or 17 approximately. Bye guys, see you tomorrow. Oh damn it, look at those great signals we do have. Exit on top of signal, on top of I can't find my word, on top of context area. So this is definitely a signal according to the strategy that we have it here. So let's see if this one plays its games through time. And oh sorry, there's another thing I just forgot to tell you about. So this is this area, okay, in which I said this is the area the bears probably have to sell, or at least the guys, we don't know what they've done and what they expect to have in return, either buying or selling, but they've been trading in this area. So definitely highlight this candle, okay, take the body of that candle. So that's the 31st of January. You get in here, we've got an abnormal traded volume, so you definitely know something's been happening in here. So highlight this area. As long as we're on top of this, it's indecision, risk management. Whenever we'll get down to this, pretty much going to be great. So don't forget that this is kind of a magnetic field that's going to attract prices. Some big guys have been trading in here, and we're probably going to oscillate near those prices before building the trend and being sure about what those guys have been done. Either they've been selling or buying. We'll figure this out in the future, but in between we'll need to risk manage, okay? Because if those guys were strong as they could have been, we would have already gone down, which means we're probably going to market make this area bullish, bearish, bullish, bearish. So don't forget to risk manage. And be aware that it's probably going to take some time. We're going to have some swings in this area, but definitely that's an area of interest, okay? So as long as we spend more time below those prices and more volume below those prices, it's definitely a good sign that we're heading to the downside. Bye guys.